Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty decline after volatile session to end at the low point of the day. IT and FMCG stocks lead the fall. Mid-caps buck the trend with the index ending in the green. Private sector's contribution to investments made for the creation of new assets dips to its lowest level in 11 years. Data from FY24 shows government's share of the pie has been inching higher, while the household sector's share has been broadly stable. Indigo co-founder Rakesh Gangwal sells another 5.7% stake in the airline for nearly 12,000 crore rupees, trims his holdings to less than 8%. This is the sixth stake sale in the last 3 years, and the Gangwal family has amassed around 40,000 crore rupees so far. Income Tax Department sends notices to several non-resident Indians and companies who claimed benefits under tax treaties with tax havens like Singapore, Mauritius and Cyprus. Sources say the taxman suspects some may have set up shell companies in an attempt at treaty shopping. The world's top electric vehicle makers are in the slow lane. Tesla sales plunged 49% in Europe due to Elon Musk's political involvement and rising competition. Shares of Chinese EV giant BYD declined for the second day after reports of heightened regulatory scrutiny by Beijing. US President Trump steps up the attack on Harvard University, threatens to take away $3 billion in grants and distribute it to trade schools across the US. Harvard is already locked in a legal battle with the Trump administration over federal funding. Over 80 people reportedly killed across Gaza in the last 24 hours as Israeli bombing continues. Hamas claims to have agreed to a US ceasefire proposal, but Israel rejects the claims. Nearly 54,000 Palestinians have been killed so far in Gaza, according to officials. At least 40 containers have washed ashore in Kerala after a ship sinks off the coast. Navy and the Coast Guard race to contain a potential oil spill. The public has been warned not to go near the containers as it could contain hazardous chemicals. Also on the show, international mutual funds are having a ball, but Indian investors remain locked out due as the overseas investments limit has been breached. Sources tell CNBC-TV18 that discussions are underway to consider a hike in the investment cap. All right, let's start with the day's market action. Market declined after a volatile session, with Nifty ending below the 24,900 mark. Mid-cap index continued to outperform. IT, FMCG and auto sector snapped the two-day gaining streak. All right, from equities to commodities, gold prices declined more than 2% today. This as a stronger dollar made greenback-priced gold more expensive for overseas buyers. USA's softened stand towards the European Union also curbed safe haven demand for the yellow metal. Well, Indigo co-founder Rakesh Gangwal has sold another 5.7% in the parent company Interglobe Aviation for nearly 12,000 crore rupees. Gangwal has trimmed his stake in the carrier to under 8%. This is the sixth time since 2022 that Rakesh Gangwal or his family trust have sold stake in the airline via a block deal. Nimesh Shah is here with more on this. Nimesh.
Who says that aviation doesn't make you money, or for that matter, when the promoter sells, one should not buy? Gangwal has actually sold and actually proved the logic wrong in terms of not making money in aviation. So since 2022, the Gangwal family has consistently sold stake in Interglobe, and they've managed to raise 40,000 crores, which is equivalent to $4.7 billion that they've raised by selling stakes in September of 2022. But that's not done yet. They still own 7.8% stake after today's block deal, which at the current price is valued at 16,000 crores. But do remember, there is a 150-day lockup for the promoters now. So for next 5 months, the Gangwal can't take further stake in Interglobe. But if you look at the history of the stake sale, that's very fascinating. The first block deal started in September of 2022 when they started selling stake. A small stake that they sold in September 2022 and raised close to for 2,400 crores. And the average price was 1927. That's the price at which the first time the Gangwal sold stake. After that, there was a 150-day lockup. So the next block happened in Feb 17 of 2023. That they sold at a marginal discount to the previous block that is at 1882. That time they sold 4% stake and raised close to 3,000 crores. But after that, it's been a fascinating journey in terms of in terms of stake sale. The next block happened in 2023 of August. That's when they sold nearly 4% stake, and that price was 24.54, a nearly 30% premium to the last block, and there they raised close to 4,300 crores. So that was in August of 2023. The next block happened after 150 days, which was in March of 2024. That is when the Ganwal family sold 5.8% stake, and that deal happened at 3,242. Another 40% premium from the last block, and that is when they raised 7,000 crores. The next block happened in August of 2024. Another 5.8% stake sold. 10,000 crore is what they raised, and that to at 47.59 rupees per share. And finally, today's block that happened, wherein they sold 5.7% stake. This is today of 2025. 5.7% stake sold, 11,000, almost 12,000 crores raised at a price of 50 to 50. So from a first block of 1850 to this block of 50 to 50, they've actually, it's been 85% higher than the first block, and consistently they've been selling stake. The good part is, while they've raised money for 40,000 crores, they're still sitting on equity worth 16,000 crores, which they can sell over the next 5 months after the lockup gets over.
Right. Thank you, Nimesh, for that. The other big story this evening, private sector's contribution to investments made for the creation of new assets has dipped to its lowest level in 11 years. Now, data from FY24 shows government's share of the pie has been inching higher, while the household sector's share has been broadly stable. Now, Sapna is here with us. Sapna.
That's right. So if you look at the latest numbers that have been brought out by the Ministry of Statistics, it tells a very different kind of a story in terms of the private sector investments, and that's basically captured by the gross fixed capital formation, which in other words means their investments for capital creation. Having said that, FY24 was around 32.4%, their share in the overall capital formation, and this was probably an 11-year low, or rather it is an 11-year low as far as the data indicates. Way back in FY16, this has shot up to its peak of around 40-odd%, slightly over 40-odd%, and in comparison to FY13, the level was around 34%, it was slightly higher than that. So net 11-year low in terms of the contribution to gross fixed capital formation by the private sector. That's one. Second, as you have rightly pointed out, yes, investments by the government, both centre and the state governments, as well as the public sector units, that has really gone up, so to speak. They've kind of tried to fill up this gap. So if you look at FY24, both combined together, their contribution to gross fixed capital formation is actually over 25%. Let's break it up very quickly. Government share is around over 13-odd%, FY24. That's also over 2 percentage points up in comparison to FY23. Plus, if you compare to FY13, that's a remarkable improvement. Basically, that was around over 10-odd% way back in FY13. Now we're looking at a number which is easily over 13%. Similarly, in terms of the public sector units, around 11.8% is what they clocked in terms of their contribution to gross fixed capital formation. FY24, it is also higher year on year, that is FY23 in comparison. Plus, if you look at FY13, yes, again an improvement, that was around 10.2% at that point in time. Similarly, now if you come to the household sector, here again, that has basically stood the test of time, so to say, though of course it shows a tapering in terms of the contribution. So FY24, the level is lower than what it was in FY23 by around, I think, 1 odd percentage point. Plus, if you look at it in comparison to FY13 also, that level was around 43.7% in terms of their contribution to, investments that basically create assets. So it has tapered somewhat, but still it has stood the test of time. It continues to be the largest contributor to gross fixed capital formation, 41% consistent share in terms of the overall pie, at least in the last few odd years. So basically, to sum up, we can say that the private sector investments, they seem to be indicating that they're kind of retreating to a decade low. That's one. Second, public sector and government, both state and centre, have stepped in. Last but not the least, the household sector is very much there at over 41% contribution in terms of the capital formation. However, its share is also kind of tapering.
Right, thank you, Sapna, for that update. Moving on, shares of Bharat Dynamics rose in trade after a money control report said that the government would procure 500 anti-tank guided missiles worth between 2,000 to 3,000 crore rupees from the company. The acquisition will be aimed at boosting India's armoured warfare capabilities. The acquisition will equip the defence sector's T-90 tanks with advanced missile systems. Now, Defence Minister Rajnath Singh has approved the execution model for the Advanced Medium Combat Aircraft. The Aeronautical Development Agency will lead the project in collaboration with private sector entities. The Defence Ministry has said that participants can submit bids individually or through joint ventures. The AMCA project is India's only fifth-generation fighter jet program. The National Company Law Tribunal has deferred the liquidation proceedings for Bhushan Power and Steel till August. This comes a day after the Supreme Court directed a status quo on the matter. The top court's move will allow JSW Steel to file a review petition in court. Remember, earlier this month, the top court had rejected JSW Steel's resolution plan for Bhushan Power and directed NCLT to initiate liquidation proceedings against BPSL. Well, Assam's government has ramped up efforts to attract high-tech manufacturing industries in electronics and semiconductors. Speaking with CNBC-TV18's Ashmit Kumar, Chief Minister Hemant Biswa Sarma said that the state government has offered PLI benefits in addition to the centre's programs.
Whatever subsidy PLI you will get from Government of India, we will provide you additional 60%. Suppose you have been able to take 100 rupees from Government of India, Assam will provide you 60 rupees more. Apart from that, we will give you free land in Ratan Tata Electronics City near Guwahati. We will give you other tax incentive. And I think we want to provide a good ecosystem because ultimately the idea is to see that we do not spend foreign exchange where actually we can save. So that's the national goal, and we are trying to align with the national aspiration.
Shares of electric bus manufacturer Electra Green Tech fell in trade. This after Maharashtra Transport Minister Pratap Sarnaik directed officials to cancel the tender order awarded to the company for failing to meet delivery timelines. Without naming the company, Sarnaik posted on X saying that the company has been inactive in supplying over 5,000 leased buses. In response, Electra clarified that the order is currently under execution by its special purpose vehicle. The Income Tax Department has sent notices to several non-residents and companies who claimed benefits under tax treaties with tax havens. Sources tell CNBC-TV18 that the taxman suspects some may have set up shell companies in an attempt at treaty shopping. Timsy Jaipuria has more. Timsy, tell us more about the details that the department has sought.
Well, that's right. The Income Tax Department is understood to have sent notices to several non-resident Indians and entities based out of Singapore, Cyprus, Mauritius and other such tax havens who have claimed benefits under the tax treaties. Sources have shared that the Income Tax Department is suspecting treaty shopping by these non-resident individuals and entities using tax residency certificates from tax havens to file lower taxes. The Income Tax Department notices have cited that these tax residency certificates from tax havens alone are not enough as a proof to claim treaty benefits under DTAs. Also, these foreign companies must substantiate commercial rationale for investment in India to claim tax treaty benefits. The tax department has also questioned that the tax residency determined by these factors like control over investors, decision-making authority, economic substance, and not just these residency certificates. The tax department suspects that intermediate holding companies in tax havens may be shell companies set up to avoid paying higher taxes, and thus these entities and individuals must answer key questions such as who is the real beneficiary of the Indian investments made by these intermediate holding companies set up in tax havens, what is the commercial rationale for setting up these intermediate holding companies in tax havens, who are the key decision makers at these companies, what is the board composition, employee strength, premises occupied for business purposes, nature of business of these intermediate holding companies in tax havens, and much more. Now, to be seen is how these notices are able to find peace with the investments and these NRIs and non-resident entities, along with the tax outgo that the tax department has to manage. Back to you.
Thank you, Timsy, for that. Foreign Secretary Vikram Misri will visit the United States from the 27th to the 29th of May. Misri is expected to meet senior officials from the Trump administration. This visit comes amid President Trump's comments on mediating a ceasefire between India and Pakistan after Operation Sindoor. The Trump administration has cautioned Indian students studying in the United States against skipping classes or dropping out of their program without informing their respective school. The US Embassy in India, in an advisory post on X, said that visas of students who resort to such actions could be revoked and they may be rendered ineligible for further visas. Now, Indians account for close to 30% of the international student community in the United States. And staying with the updates on Donald Trump, the US president has threatened to redirect $3 billion in grants from Harvard University to trade schools across the country. In a fresh salvo, Trump slammed the Ivy League school for allegedly delaying the release of foreign student records. The attack comes after his administration moved to block Harvard from enrolling foreign students for allegedly promoting left propaganda. The European Central Bank President Christine Lagarde has hinted that the euro could become a viable alternative to the dollar. During a speech in Berlin, she said that the declining trust in the US economic policies could open the door for the euro to play a greater role internationally.
The ongoing changes create the opening for a global euro moment. And this is a prime opportunity for Europe to take greater control of its own destiny. With the right policy responses, there could also be opportunities. The changing landscape could open the door for the euro to play a greater international role.
Japan has lost its position as the world's top creditor nation to Germany after 34 years. This as Germany's stronger pace of asset growth in 2024 overshadowed Japan's record surge in net external assets. Germany's rise to the top is mainly due to its strong trade performance. China followed in third place with $3.5 trillion in new assets. Shares of Chinese electric vehicle giant fell, with the BYD registering losses for a second straight day. This owing to mounting concerns over regulatory scrutiny from Beijing. BYD's steep discounts across several models also stoked fears of a renewed price war in China's EV market. European sales of Tesla vehicles plunged for the second straight month in April. This as the US electric car maker continues to face reputational damage regionally and rising competition. Tesla sales fell 49% compared to last year in the region, according to the European Automobile Manufacturers Association. The Musk-owned EV giant's sales tanked nearly 40% year-on-year between January and April. Private lender HSBC Bank has laid off over 20 analysts as the firm plans to restructure its investment banking businesses. As per a Bloomberg report, the cuts will be primarily made in its Europe division. The restructuring will also include leadership changes within research divisions. Right, time for a short break. Coming up next, international mutual funds are having a ball, but Indian investors remain locked out as overseas investment limit has been breached. Details when we return. Welcome back. At least 40 containers have washed ashore in Kerala after a ship sank off the coast. Navy and the Coast Guard raced to contain a potential oil spill. The public has been warned not to go near the containers as it could contain hazardous chemicals. Defense officials have said that efforts are currently underway to respond to the oil spill. They added that the situation is currently managed and under close observation. Officials confirmed that as of 1:30 p.m. today, no oil has made its way to the shores of Kerala. Market regulator SEBI has granted final approval to Jio BlackRock Mutual Fund to begin its operations. The entity is a joint venture between Jio Financial Services and BlackRock. SEBI also approved Jio BlackRock Asset Management as the AMC for the mutual fund. The joint venture was first announced in July 2023. Israeli forces have killed over 80 Palestinians across Gaza in the last 24 hours. Reports suggested that Hamas has agreed to a ceasefire proposal. However, Israeli officials have rejected the claims. Officials have also denied that the proposal was put forth by the US adding that the Israeli government would accept it. Meanwhile, a World Health Organization spokesperson has said that everyone is suffering in Gaza as hospitals have run out of medical supplies as Israeli blockade continues. And from one war-torn region to another, Ukrainian President Zelensky has said that Russian forces launched over 900 drones against Ukraine in 3 days. In a video message posted on X, Zelensky said there is no military logic behind this. He added that the attacks were a clear political choice of Russia and the choice to keep waging war. The Kremlin has responded to Donald Trump's remarks after he called Russian President Putin crazy. Now, Kremlin spokesperson thanked Trump for his work in mediating negotiations with Ukraine, however, stated that it's an important moment which is connected to an emotional overload of everyone involved. Trump's comments came after Russia launched 355 drones against Ukraine, killing 10 people. And speaking of Ukraine, Germany and Western allies have lifted restrictions on Kiev to fire long-range missiles into Russia for the first time. This comes after Russia has been constantly bombarding the region with drones. German Chancellor said that this move will help Ukraine defend itself against Russia. In response, the Kremlin has said that the decision is dangerous and is detrimental to reaching a peace agreement. At least 50 people have been injured after a car rammed into a crowd of Liverpool fans during the team's victory parade. The police have arrested a 53-year-old man who was believed to be the driver of the vehicle. Prime Minister Keir Starmer said that the whole country stands with Liverpool after this horrific incident. International mutual funds are delivering some of the best returns right now, but most Indian investors can't ride that wave. Sources tell CNBC-TV18 that discussions are underway between the RBI, SEBI and fund houses to raise the cap on overseas investments. The limit was breached 2 years ago, locking Indian MF investors out of the huge opportunity. Shivani Bajaj gets you more on this story.
International funds have delivered the kind of returns investors chase, double-digit global exposure and also portfolio diversification. But Indian investors have largely missed it out. Even as international mutual funds surge ahead, most Indian fund houses remain barred from accepting fresh inflows into the global scheme. The reason? A regulatory cap. Indian mutual funds can only invest up to $7 billion overseas, while ETFs are limited to $1 billion. That cap was hit in early 2022 and it hasn't budged since. Now, sources tell CNBC-TV18 that RBI, SEBI and fund houses are in continuous discussions about raising these limits. And this discussion is coming at a time when global funds are not just recovering, but outperforming their benchmarks. In April 2025 alone, international mutual funds delivered average returns of 8.51%, making them the top performing category according to Value Research. Zoom out to the last 12 months and the rally looks even stronger. Look at some of the funds. Mirai Asset Hang Seng Tech ETF FOF up 61%. Mirai Assets, another fund, NYSE FANG Plus ETF is up 41%. Another fund, Nippon India ETF Hang Seng Bees is up 32%. Invesco's India Global Consumer Trends FOF is up 25%. But it's not just about the past year. Even in the first quarter of 2025, international funds comfortably beat the broader Indian market. Look at some of the numbers. DSP World Gold Fund 31% and its benchmark has delivered 37% globally. Mirai Assets Hang Seng Tech ETF FOF is up 25%. Similarly, ICICI Pru's Strategic Metal and Energy FOF is up 21%. And Nippon India ETF Hang Seng Bees is up 15%. So all of these funds, including those investing in Brazil, look at HSBC Brazil Fund, 15.12% in a quarter, beating the benchmark. Compare all of this to BSE 500 TRI, which posted minus 4.39% over the same quarter. So the opportunity is clear. Despite delivering some of the strongest returns in the market, most of these funds remain close to Indian investors. Now, why are the fund houses wanting a cap revision? This cap was last revised in 2008. Mutual fund industry AUM has grown 10x since that time. Investor appetite for global exposure is rising, and global themes from AI to clean energy to precious metals are gaining traction. For now, fund houses are waiting on the RBI to signal a change, because while the world's markets open up, Indian investors remain in a regulatory lockdown, and the cost of missing out is growing with every quarter. Back to you.
Thank you, Shivani, for that. With that, is a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.